So this is a fireside chat that's all about, it's titled, From Exchange Floors to Blockchain, the New Era of Regulated Security Tokens. Very exciting. Happy to have you here today, guys. So the first question, I'm going to do a few questions, a few themes, and then I'm going to do some rapid fire questions to put these guys a bit on the spot. So both of you were early movers in transforming how capital markets operate. What personally drew you to the space that sort of intersects traditional finance and blockchain? I'll start with Richard.
You know, capital markets are really all about an expression of democracy. And after Brock was talking some big thoughts, I mean, I think I can go there. But it really is. It's an opportunity to permit people to exercise their choice by voting with their hard-won dollars, their wealth. And the beauty of the public capital markets is that you can invest alongside anybody, the smartest guys, the investment funds, the pension funds or whatever. And if you've got an idea, and if you believe the entrepreneurs that are floating their companies on the exchange in the public markets, you have an opportunity to play on the same base as everybody else. And I see a lot of the power that blockchain brings to markets, in fact, enhancing that by making a whole vast new array of products available through the traditional finance. And of course, I'm dressed this way so people can realize I'm the traditional finance guy and Vince is not.
I think the role of CEO of Canadian Security Exchange did that itself, but yes. And ironically, Richard is disappointed that Polymath is doing an RTO with a company listed on the Toronto Stock Exchange Venture. So we're sorry about that. Next time around.
I can write the letter for you, Nat.
Okay.
You're a venture exchange.
Let's talk after. If anyone from the TSX Venture is here, apologies.
Real easy.
All right, on to Vince. You can answer the same question. You forgot the question. Okay. You guys were both pretty early movers in sort of this intersection between traditional finance and blockchain. What drew you to it? More specifically, what drew you to Polymath?
I think that this is a tough problem space, and nothing is worth doing anything actually if it's too easy. It's not worth doing. This is tough, right? And there was just so much friction in what we're doing. Like in my previous company, I was in payments. There's a lot of friction there. We eventually had to skip over North America and just sell into the emerging markets. There's a lot of friction here too. But I think the sea has parted. Like there's a clear path actually forward. There's a regulatory framework. We're seeing a lot of positive movement as well, especially with the launch of our platform, launch of freemium. We had dinner last night at the Hockey Hall of Fame with customers, clients, partners.
Many lawyers.
A lot of lawyers.
And we got closer to the Stanley Cup than Austin Matthews ever will.
Yeah. Oh no, Richard.
That doesn't make you happy, by the way, for the record.
But I think what really attracted me is that if you look at all the industries that have been disrupted, right? The taxi industry has been disrupted. We stream everything right now. Your industry is actually about to be disrupted.
Well, they keep telling you that because, I've worked on Bay Street since 1988. And, of course, the internet folks, they were going to, again, completely disrupt the traditional means of trading securities and the regulatory frameworks and so on. And in fact, what we did was we stole the technology and applied it to solve a number of problems that we have to reduce costs, to improve investor access. I mean, you think about, again, just from that shift, where an individual investor now, and a lot of brokerage firms, is paying zero commission at a penny spread to buy just about any stock in Canada, the United States. And they have research tools, charting, graph, risk analysis, and so on, that 5 years ago would have been the envy of the prop desk at Goldman Sachs.
But on disruption, and I'll clarify that, it's disrupting in a positive sense that, people will be wealthier and you're not going to be without a job. I think we're just going to run capital markets more efficiently. right? There will be less capital requirement on both sides of the transaction that's required. We're settling in real time, right? So I think what we're about to embark on is an industry actually where we're far more efficient. So again, as you were saying before, you leveraged actually what the internet was doing. You're going to be leveraging what the blockchain industry is actually in order to operate your business more efficiently, putting more money into your company's pockets so that you can invest in other technologies that are far more interesting.
Absolutely. You and I are probably going to disagree on that real-time settlement thing. There has to be a little bit of leverage in the system, because if you pre-fund every order, we did a back of the envelope a couple of years ago just to see how much you'd have to put up to back or pre-fund every order in the U.S. cash equity markets, and the number starts with a Q. And I don't think it was a quad, I think it was a quint. So, there does have to be either leverage of the system or mechanisms developed to reduce the capital required to back that instantaneous settlement. But again, we could clear the room if we start talking about the intricacies of back office stuff.
I would agree. So let's move on to the next question. Richard, not to put you on the spot, but how is the Canadian Security Exchange preparing for a future that includes tokenized securities? And what is the potential to collaborate with blockchain innovators like Polymath?
Well, it's actually really easy, because we were talking about that last night all day yesterday, and this week, of course, in Toronto. But it's actually pretty straightforward to put some kind of tokenized asset into an equity wrapper, right? A trust of some description. Again, we're going to clear the room if we start talking about legality of trusts and so on. That way we can leverage the existing infrastructure, whether it's the trading networks, the all of the dealers, the analysts, all of that stuff, the exchange, the clearing and settlement organizations, and everything else, to get these products in the hands of individual investors at a very cost-effective level. Now, in the meantime, we're going to have to apply these technologies, again, as Vince said, to improve a lot of the processes, to drive cost and risk out of the system, which we can do. But that's not like snapping the fingers. The clearing and settlement stuff, it moves very slowly. It has to move very slowly. We're basically clearing all the cash equities, all the derivatives, all of the bond trading, all of the foreign exchange trades in Canada. And if that place were to fall over, it would be a terrible day for all of us, I can assure you.
Okay. Good answer. That's something, you can ask him the question.
What would you start with? This is not going to be a big bang. So pick one of those particular products. What are you going to start with that's probably less risk?
Well, as I said, I think putting tokenized assets inside of an ETF structure or ETF wrapper or exchange-traded product wrapper is the right way to go about it. And then you can demonstrate to the marketplace the power of these tools. And Brock was talking about a number of the companies that were here were talking about the things that you can do. So again, we know one thing, and that is that musicians have gotten screwed in selling your back catalogs, for example, to private equity guys, right? There's only one or two bidders in the room that understand how to make it work. Can you imagine if some of these bands, some of these musicians are selling to the public, to their fans, and then you lever the power of the token to basically then engage with your fans on a closer level, right? You can tell them when you're going to be on tour. You can drop songs to them. You can drop promotions on tickets. And again, we talked about hotel rooms and travel to the show and all of that stuff. That's possible.
Yeah.
And again, we've got, I think, some easy wins that demonstrate the power of the structure, and that will drive the further investment to make more and more things possible.
I'm a big fan of the 407, and I wish that would have been tokenized versus sold off, and I'd take it more, and at least I'm getting paid back.
So Vince, Polymath is building the plumbing for regulated tokenization, slowly but surely. What kind of issuers or asset classes are leading the charge?
Real estate is number one. That represents 60%. The rest after that is commodities and equities. A lot of startups that are licensing our system. We've had, I think at day one of our launch of freemium, there was well over 50 that have signed up within the first 3 hours. And those are all being converted and put onto our freemium platform, our capital platform, and will be tokenized. So there's a stampede of I'll call it asset classes, but the number one asset class, real estate, right? Because it's highly illiquid, right? And we're sitting in one right now. Well, why can't this be tokenized as a private club? And it should be.
And I think what you need to look at is what are the private equity guys doing this week? Right? What are the asset classes that they are exploring and investing in?
Yes.
Because again, they're taking advantages of opportunities for mispricing in these assets. Because again, they're deeply illiquid. There's no sort of market for these things until or unless you can actually put it inside of some kind of product, which is then available to the broader investing public.
And we've seen all kinds of weird stuff. People that have a pile of dirty coal that they want to tokenize the coal so that they can clean it, because burning coal is in fashion again, as you know. To distilleries and aging whiskey barrels. To
Goat farm.
A goat farm. Actually, there was a farm in Namibia. And what was the last one? Yachts. A family that has a fleet of yachts that they lease out to the footballers in the UK. They want to be able to tokenize fleet of yachts in order to add more yachts to their...
Personally, I think luxury items like Hermes bags should be tokenized, because I don't know when I'll be able to afford one, but I know that a lot of people disagree with me. Anyways, I just wanted, if you fast forward to 2030, not too far away, what does a modern tokenized capital market look like to you? And what happens to those that are left behind and don't adopt?
Well, I think, again, we're going to be seeing whether it's the existing ETF providers or new providers show up that package products along the lines of what I spoke about.
Yeah.
I don't know by 2030 that we'll have made the big infrastructure changes to make all of to fully leverage the power of the tokenization approach.
Yeah.
But I think we will have seen many successful products launched, high degree of investor satisfaction, a lot of wealth created, and rising awareness of using the tokenization approach to embed non-traditional underlying assets into a security.
Okay, I think that's a good goal for 2030, Vince.
Well, Nat, as you know, Polymath is going public. How do you know? People know.
I didn't know. Shout out to Deloitte here, who has a little bit of a contingent.
Who's in the house from Deloitte? Thank you.
There are advisors.
But yeah, Nat, we're going public, and we're going public with an asset that has a broker-dealer in what country was that?
Italy.
In Italy. There we go. That'll be a trading venue of the future. So when we talk about what it looks like in 2030, well, I'm hoping we get there before 2030, and I think we will get there because we're going to own it.
I hope we go public before 2030.
I think we got the green light.
I hope so. It's supposed to be August. Stay tuned, August 2025.
But I think what we're going to do is we'll blaze a trail for you, and then you could be the fast follower actually behind us. We're going to. But I think it's important that the existing exchanges start adapting. Otherwise, I think that the cryptocurrency exchanges will start adapting.
Well, you and me are going to fight if you keep calling those guys exchanges. They're not exchanges. I'm an exchange.
Fair enough.
It's 2 years to become an exchange. It costs us millions of dollars to be an exchange. It costs us millions more to stay being an exchange. They're not exchanges.
What do you call them?
Interdealer brokers.
Everybody hear that?
Anybody who's
Who operates an exchange in the room?
if you have client funds, if you potentially trade against your own clients, you are not, by definition, an exchange.
Drop the mic. Okay, final question here. What advice, both of you have to answer this, what advice would you give to regulators, technologists, and capital market participants who want to be part of the shift but don't know where to start? Richard.
I'm of the view that we don't need to do a lot from a regulatory perspective.
Okay.
I heard your earlier panel, and I thought one of the best answers was consistency.
Yeah.
So don't go pulling the rug out or whatever because one bad apple got in, did something stupid, and people lost money, and then clamped down and obviously cause problems to the people that are trying to be legitimate business builders. And we've seen lots of evidence of that. I think again, as I say, we can work within the existing framework right now and build a lot of products that are going to build the momentum to get where we want to be. So consistency in approach, and just let us go, let us innovate.
Very nice. I think Deloitte would give us the same advice, consistency. Vince?
I think being transparent, providing the transparent platform that we're providing as well. And I think, as I said earlier, or it was yesterday, that we've increased the stakes for layer ones to operate in this space by being public, by adding another layer of governance, adding another layer of transparency and financial reporting. And I think that bodes well for the industry. I was meeting with a bank earlier this morning, and I said, "What do you think about that positioning?" And the response was, "You check all the boxes now," whereas before we didn't. So having that public base that we will have, I think it will make it a lot easier. That this is a company that is building trust, is build a trusted network, and takes governance seriously.
All right. Great way to end there. Shout out to both Vince and Richard for coming on Nats Talks today. And hopefully talk to you soon. Thanks, guys.
Thanks, Nat.
Thank you, Matt.